Sui just pulled off one of the most unexpected comebacks of 2026, and that changes everything for investors watching its long-term trajectory. After bottoming below $1, it surged toward $2, only to pull back to $1.15, still a critical juncture. The real story isn't just the price swing. It's what's underneath. A shift in narrative, infrastructure, and institutional access that's redefining the entire Sui price prediction landscape. For anyone holding or considering a position, the question now is no longer just whether Sui can recover, but how high it could realistically climb by 2027 given the new dynamics now in play. The catalyst wasn't retail hype. It came from two coordinated moves in May, major announcements at Consensus 2026, and more importantly, the launch of regulated Sui futures on CME. That single event changed the game. Institutional investors now have a regulated, familiar pathway to gain exposure to Sui, no wallets, no self-custody, no DeFi complexity. This isn't speculation. It's infrastructure. And when Wall Street opens a door like this, liquidity follows. The timing mattered. Sui had just hit a yearly low near 0.8081. Buyers stepped in fast, and the momentum built quickly. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The deeper shift is happening at the protocol level. Mysten Labs didn't just tweak the roadmap, they pivoted to Sui Stack, transforming Sui from a gaming-focused Layer 1 into a full-scale institutional blockchain stack. The vision now includes native private transactions, zero-fee stablecoin transfers, and integration with traditional trading rails. That's not marketing fluff. It's a fundamental repositioning. The old narrative was speed and gaming. The new one is privacy, efficiency, and real-world financial utility. That changes who sees value in Sui and why. Another quiet but powerful signal. Over 108 million Sui tokens have moved into direct staking. That's not a minor detail. It means a significant chunk of the liquid supply is now locked up, reducing immediate selling pressure. In volatile markets, supply contraction like this can act as a stabilizing force. Combine that with the fact that initial insider vesting schedules have mostly expired, and you've removed two major overhangs that plagued early-stage Layer 1 projects. The tokenomics are cleaner now. Future inflation comes mostly from predictable staking rewards and ecosystem incentives, not sudden unlocks. Still, the road ahead isn't risk-free. Over half the total supply remains locked until 2030. That's a double-edged sword. On one hand, it prevents dumping. On the other, sustained demand will be essential to absorb new emissions as locks expire. And while the network has improved, earlier outages did damage confidence. Reliability isn't optional for institutional adoption, it's mandatory. The Sui price prediction depends not just on hype, but on consistent uptime and developer traction. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The important part isn't just the price targets. It's that Sui is no longer being judged solely on speed or TPS. The comparison to Solana still comes up. Yes, Sui has higher theoretical throughput, but Solana leads in real-world volume. The real competition now is for use cases, and with Sui Stack, Sui is betting on privacy, enterprise integration, and financial infrastructure, not just performance. So what's the next signal to watch? Not price alone. Watch for deeper integration with institutional trading platforms, growth in private transaction volume, and whether staking participation holds during rallies. Those are the real indicators of whether this Sui price prediction has legs. The market has spoken. Now it's about execution.